spending planner is the paramount importance for effective financial management. It serves as a strategic tool that helps individuals or households allocate their financial resources wisely. Hi, my name is Pfeffer-Hahn, and today I'm talking about my spending planner. By creating a detailed spending plan, individuals can gain a comprehensive understanding of their income, expenses, and financial goals. This in turn enables them to make informed decisions about their financial priorities, save for their future needs, and avoid overspending or accumulating unnecessary debt. Moreover, a spending planner empowers individuals to track their financial progress over time, making it an essential instrument for achieving financial stability and long-term success. In essence, a well-structured spending planner not only promotes responsible financial behavior, but it also facilitates the realization of financial aspirations and security. 3 years ago, I launched my podcast, and my goal was to provide information on financial topics in a way that makes financial literacy available to everyone. Like most people, when I heard many of the financial words, I truly didn't understand what they meant. So I began my own journey with my Master's of Science in Personal Financial Planning. That, combined with over 20 years of teaching, created this YouTube channel. One of the biggest topics that I get asked about is about budgeting. And to make it easy, I decided to author a spending planner to help you with your monthly expenses, your net worth, savings goals, and retirement planning. This way you can keep your monthly spending down. It will make more money available to you for savings and retirement goals. But the main purpose is to give you an accurate picture of where your money is going and how to make it work for you. You should start with your checking account, listing out your monthly bills and the amounts that you spend on a regular basis. Some will be the same each month, and others will be variable. In other words, it will vary each month, like your electric bill. Those that you can count on the amount are pretty easy to budget for, like your housing, paying your mortgage or your rent, because that's not going to change. And insurance and some other debt is the same way, while food, clothing, and credit card bills are most likely going to change or adjust each month. Finding your net worth is the first thing that you're going to want to work on. That way, you'll be able to see all in one place what you owe, and that's called your liabilities, and what you own, your assets. You're going to be able to find your net worth by adding up each of your assets and then deducting or taking away what you owe, your liabilities. And in this way, you can see how much wealth you've accumulated. If that number is not as much as you want, don't worry. You're going to be able to calculate your net worth again at the end of the year. And in that case, you'll be able to look for an increase. And that's what you're aiming for. Because your net worth is only a snapshot of where your finances stand right now, the day you create it, increasing your assets and reducing your liabilities will help change this snapshot. When you pay down your debt, increasing your wealth and net worth, you may not have stocks or bonds or other investment vehicles yet, but the more you know and save, the more money you'll have to grow, and that's going to increase your wealth. You should start by tracking your needs. This may include housing, rent or mortgage, as well as property insurance. That might also include transportation payments, gas, maintenance, and insurance. This could include public transportation, Uber or Lyft. You'll also need to consider your insurance healthcare costs and utilities like electricity, gas, water, sewer, internet, and cell phone. These are all included in this category. Groceries, toiletries, childcare, along with loan repayments need to be accounted for here as well. You'll want to keep track of how much you're saving, spending, and donating. But completing this first step will help you organize into an easy-to-understand visual plan. One of the key features is making sure that you're not leaving anything out of your calculations. And that's where the workbook comes in handy. You can track visually what you're spending, but it also prompts you to consider expenses that you may forget about, especially if it's not part of a monthly spending plan. Homeowners' dues, property tax, car maintenance, dental work, renewals on apps, those are all costs that you need to capture, but they can be easily missed if you're just trying to remember what you've spent your money on. However, the largest chunk of money is going to go to your monthly expenses. A reliable way of keeping track of those is by setting up a time that you can review what you spent and add it to your monthly spending planner. This is broken down into categories, so you'll be able to see a total at the end of the month. Let's say you have medical expenses, childcare, specific utilities, and donations. Those are just some of the examples you'll want to track. You may want to see daily where you're spending, how often, and so I've included spreads here that have each day and categories available. This one act is the greatest insight to where your money is going and where you would like it to go instead. The categories are important not only for seeing where it goes, but jogging your memory to tally the money spent and keep track of it. I read an online article called Life Hack, and they mentioned those who were surveyed found out that after tracking their monthly expenses for at least 3 months, they reported they had better insight into their spending. Participants, in fact, recommended reviewing where they spend their money. They found this began to let them easily find patterns, both good and bad, and they were able to realign their spending to their values and their priorities. 80% of the respondents found that by tracking this way, that they and their significant other eliminated the stressors that they found that they had with an honest and transparent communication regarding their finances. And money is really the #1 cause of stress in a relationship. So if you can work like a team to plan and compromise, you'll be able to eliminate most relationship stress. 79% found that they felt that they made fewer impulse purchases because they had to keep track of it. Whether they really acted on that knowledge or they didn't want to add an item that they didn't need, like a new Apple Watch, they gained an understanding, though, of their accounts by using the purchase tracker, and then they spent less and felt less guilty. 81% of those who used the tracker became more confident that they'd be able to reach their financial goals by knowing how they were spending and how much they were saving. They could see how their earnings, spending, and savings were going to help them achieve their goals. This way, they could prepare for unexpected bills like a leaking water heater that could derail their plans. Finally, 75% of the people agreed that their anxiety about money was reduced by facing their own spending without burying their head in the sand and hoping for the best. The reality is that failing to plan is the same as planning to fail. So by gathering information and sitting down to map out the cash flow, they could see a path to success, no matter how far down the road that was. Another great benefit to using a spending planner is keeping up with daily and weekly entries to see how inflation is affecting you. Are food prices going up? Did switching to a low-cost grocery help? Is buying gas in a nearby town actually worth the drive? Do warehouse plans help you save money, or do you end up spending more by shopping there? Through honest evaluation of how you handle your money, you can be in control of your spending and in turn increase your savings. You may not want to cut back or make changes, but when you can see what your money is doing for you, the bottom line is you'll be more invested in making these meaningful changes, not just a little, but a lot. All of this means that your partner needs to be willing to participate if you have combined accounts. The act of tracking together is indicative of working together towards a lifetime goal, coordinating purchases and aligning priorities that you have as a couple. This leads nicely to other great reasons to work together. You'll be able to catch purchases that one of you might have forgotten to track, specifically purchases that you don't have receipts for, like online purchases, credit card charges, bank records, and making sure that nothing sneaks through. Many people supplement or live off variable income. They can't count on any set amount weekly or monthly, and this means tracking in a different way. It might even be a great reason to get on a budget planner through your utilities so that you know exactly what you owe each month. And it means whether or not you used more electricity or gas during a season. I do this because my gas goes up in the winter for my heat and electricity goes down. And in the summer, my electricity goes back up to cool the house. But this way, both bills are consistent throughout the year. And this type of income might mean that you live off only what you previously earned and not spend based on what hasn't come in already. This is a way that you can steel yourself against when you have a slow period of income. You may also save your income in one account and have it automatically transfer as cash over each week or month to pay yourself, instead of seeing that large lump sum hanging around. And that way it's not easily seen in an account and tempting to be spent. Your budget may also include charitable giving. Keeping track of receipts is a must here, as well as keeping track of the money and whom you donated to, because that will help you at tax time. It also lets you see how much you're giving to make sure you've hit your gift-giving goals before year's end. Another section here allows you to track who you want to give gifts to, what ideas you have for them, and how much you want to spend. This gives you an overall idea of your gifting and if you need to make adjustments on how much you're giving each month or year. Be sure and keep your savings in mind as well. Sometimes making a game out of savings is a great motivator. It's terrific for kids to put money towards their savings. I've included a few ideas here to help you get started. Credit card debt or any of the long-term debt like student loans, cars, boats, or any revolving credit should be tracked carefully and repaid prior to a lot of savings. Because if you owe 8% on a loan and you're only making 1% on your savings account, you're actually losing money by not repaying the debt. I include a tracker here for any of those types of bills that you want to keep on top of as well. Finally, at year's end, you'll recalculate your net worth again. What do you notice? What's been some of your successes? What do you still need to work on? How is your financial situation improving? Investopedia calls your net worth your financial report card that allows you to evaluate your current status and help you figure out what you need to reach your financial goals. This does not mean there's an ideal net worth, only that you can achieve your near and long-term financial goals. This is merely a way to get started, but it's a good plan for you to be able to see how much you should have at your current age. No matter how you track your spending, keep your goals in mind and know that this effort will bring you more in the long run. You can order your own copy of my workbook in the link below, and thanks to all of those who have already purchased it. This has been Kathy. Please like and subscribe.